The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Hello and welcome to Squawk Box. Here are your headlines today. The S&P 500 and the Nasdaq closed at fresh record highs in a holiday-shortened session, while the ADP report shows job creation slowing for the third straight month.
This pay growth, the fact that it is slowing in a modulated way, is so important for the Fed. I think it is the most important data point right now.
New polling predicts a hung parliament in France, with the far-right scene falling short of an absolute majority in Sunday's second-round vote.
Donald Trump widening his lead as US President Joe Biden tries to fend off a growing number of Democrats calling for him to withdraw as the party's nominee. And it's decision time in the United Kingdom as millions of voters prepare to head to the ballot box, with polls opening in exactly 59 minutes' time.
A big day here in the UK, but we're not going to be talking about it at all, really, today.
No, I mean, there is a degree we can talk about it over the next 59 minutes if we chose to. We're taking our lead from other huge British broadcasters and just pulling back a little bit earlier than we perhaps need to as well. It's very important for Ofcom rules, for Electoral Commission rules as well, that the channels are seen to be not discussing editorially a lot of the outcomes from 7 a.m. onwards when the polls open. So we'll just dial back a bit. We'll talk about a little bit about the FTSE and where it's at as well. So and the gilts and the currency, where we are at. It is ahead of a very, very big day.
We're about 59 minutes out from the polls opening, so no one wants to influence any verdict at this stage.
Exactly.
And full coverage, of course, tomorrow. But in the meantime, let's just take a look at the US, as Fed officials are on the search for greater confidence that inflation is sustainably heading to 2% before cutting rates from their current 23-year high, according to minutes from their latest meeting. The phrase greater confidence is mentioned 4 times in the 10-page document and chimes with recent comments from Fed Chair Jerome Powell. FOMC officials left rates unchanged in June, with an updated dot plot showing one cut of 25 basis points by the end of the year. Jobs growth among the US private sector slowed for the third straight month, rising by 150,000 in June, according to the ADP. Now, the ADP chief economist, Neela Richardson, told CNBC there are pockets of concern.
The concern, and this is one concern we have, is how concentrated these job gains are. As Steve mentioned, they're in the service sector. The leisure and hospitality sector is carrying 40% of the job gains this month. And so while we think that this is a gradual cool down that we all expected, I'd like to see the hiring be more broad-based than it is now.
Right, in terms of the initial jobless claims, it came in at 238,000 for the week of June 29th, and that is up slightly from the previous week. Continuing claims hit 1.85 million. That is the highest level since Nov 2021. But again, the market saw absolutely zip to scare them, certainly if you own technology stocks, Karen.
Indeed. Let's take a look at some of that action that we saw stateside. Up 0.8% on the Nasdaq, S&P 500, again stretching into positive territory. That tech rally very much around the semiconductor stocks, and you can see this clear outperformance flaring up again of the FANG Plus stocks versus the semiconductor names. Clearly big moves that we're seeing in those big name semis, and Nvidia back in play. Big moving stock to the upside for both the S&P and for the Nasdaq yesterday. Actually, Amazon to the downside, one of the weights on those two major indices as they again stretch for record territory. The Dow left behind to the bottom, United Health, a slight reversal of about 23 points to the downside. Let's take a look beyond that, because don't forget US markets. This is the picture before the 4th of July holiday. We're now into this period of not trading, so we're not going to get any fresh clues for that US market action for the next 24 hours or so. So what we've got really looking at other big signals, and the dollar and positioning around dollar on the back of some of the weakness in the data yesterday. The US ISM services activity sliding by to its lowest level since mid-2020, that having knock-on consequences for the dollar trade. And you can see dollar even on the back foot versus the Japanese yen, 161.50. A cable jumping around this morning on the as we count down to the polls opening this morning, 127.40. We are seeing a slight outperformance. Euro dollar on the back foot, we're 107.85, but we have gained some territory in recent sessions. Again, election risk. We are counting down to the second round of the French election over the weekend, so perhaps some natural caution there. Dollar perched higher versus the yuan. I want to take you to the Asian markets. Picking up on that US lead, you can see Tokyo stocks rallying about 0.9%. But again, with the 4th of July holiday, it does give us a bit of a barren pattern to get through over the next trading session. But firmer is what we're seeing. Not much on Hong Kong, a little bit weaker on Shanghai. Australia picking up some territory, more than 1% to the upside, Steve.
So the New York Fed President John Williams says he's sceptical about the neutral rate, otherwise known as the R rate. It's sceptical it's risen. Williams added that the argument for a sizable increase in the R star has not yet met two key tests, while saying he does not think there should be too much focus on it when it comes to monetary policy decisions.
Well, joining us now is Victor Hort, who is the Global Head of Credit and Equity and Derivatives Strategy, BNP Paribas. Victor, thank you so much for joining us.
Thank you.
I want to pick up on the Fed minute. So what we saw from those Fed officials, they don't have enough confidence yet. They want more data to see what the state of play looks like in the economy around inflation, also growth. But the data we've had, even just in the past 24 hours, suggesting there is some cooling coming into the mix with the US economy. Do you think some of the data points are starting to fulfill that confidence gap that the Fed has?
Absolutely. I did feel that the minutes felt stale or old, if you like. It was definitely dovish, but it was cautiously dovish. And I think there is plenty of space for the Fed to move in that dovish direction, further in that dovish direction, if the data continues to perform the way it has so far.
Just picking our way through the data, we had the ISM, so the measure of services activity. So that's taken us back to the lowest level since mid-2020. The Atlanta Fed's GDP Now estimate has dropped to just 1.5%. That was at 1.7% previously. So when we look at these data points, what sort of economic picture are we starting to get? And is there any risk that it's not going to be a soft landing that the market hopes for?
I think those risks are fairly low at this stage, right? But yeah, if you go back to the Fed, so it was a dovish but patient Fed, right? So still talking about high rates for longer. They have time, and in many ways doing exactly what they were doing earlier in the year when the data was too hot. They were also advocating the virtues of being patient. But now, as you say, the data is cooling, and the dovish parts of the minutes were about the labor market, whether there is something more profound weakening going on. It was about the inflation data, which in the first quarter was too hot and above trend, and now definitely back to trend. But no sort of real shift yet. And, with respect to the data, I think you're looking at a picture where data is cooling, but not colding, if you like. And I think that's fine. The history of markets are bipolar very often, worry about two things at the same time. I think there's plenty of space between too hot and too cold for the market to feel it's actually just fine. Not so bipolar that you worry about rate hikes one time and a recession the next, if you see what I mean.
The market's not worried about anything. I mean, you are, amongst other things, in your huge title, Head of Credit, Equity and Derivatives. And if I look at the VIX, it's a useless indicator of market fear. I've always thought this fear index was a nonsense phrase anyway, but it's trading at 12. I mean, historically, that is stunningly low. No one's taking out insurance on the downside. Why?
No one's taking out insurance on the downside because for the time being, there is very little downside. That number that you're referring to, the US equity market is actually realizing in volatility terms something around 7 or 8. Mm-hmm. So even 12 is actually a fairly high number, which, is consistent with this idea that actually conditions are somewhere right in between too hot and too cold at the moment, and very little reason for the market to be more volatile. And these things tend to be the case over summers, obviously.
So did you say there's very little reason for the market to be more volatile? I can think of 10 reasons for the market to be more volatile. I can think of 3 political situations which are extraordinary at the moment. I can think of 2 global wars. I can think of concern about vast amounts of deficits. I can think about overvalued stocks in the tech sector, where you've got a car company, stroke tech company, it's trading on 73 times forward, and yet it hasn't got any growth in sales. I could go on. I normally do. I'm really boring like that. But there's a lot of reasons to be concerned. And yet the market isn't.
No, there are reasons to be concerned, but very few of those are necessarily imminent risks. If you look at the wars,
so you don't think, for instance, let's go to that unnamed car company that's trading at 73 times forward, that's just given its unnamed boss a $56 billion pay packet. You don't think there's anything to worry about in a company that's flatlining on sales, that's trading at 73 times forward, as symptomatic of what's going on in this market?
I mean, I don't have a strong view on this individual company, but it is, within a broadly diversified market, not the only thing that necessarily propels things at the moment. The reality is that you are in an environment where earnings growth is fairly healthy. We're going into another season right now. An environment where up until now global growth has actually been broadening. Europe's been the laggard. It's actually been accelerating a little bit. An environment where we used to worry a lot about China, but China's in its own way putting in some stimulus and drawing a floor under its growth risks and so on. So you're left with an environment where, actually things are sort of in that zone between too hot, too cold, and maybe that is exactly where you just tick gradually higher.
But to that point that Steve's making around some stocks outperforming others, we have seen a concentration still around a magnificent 7 number of stocks. There is a view that if we are mid-cycle on this market, which some participants think we are, then there is a view for broadening out, that other areas that have been unloved, whether it's small caps, it's other stocks that have been left behind, should be picked up in this rally. Earnings season could be the catalyst. Do you think, Brett, that's going to be returning anytime soon?
Well, in terms of things that we probably worry more about, it's actually less U.S. tech and probably more areas around, say, U.S. discretionary, where you have exposure to the part of the consumer that's most affected by higher rates, and where there's been signs of late of individual companies who've warned. Just remind us where that is again. Is this athleisure wear? Is it fast food?
Exactly. What are we talking about these days in those categories?
Yeah. And it makes sense, right? So for parts of the consumer space, actually rates are painfully high at the moment, even though for maybe the average consumer and certainly the high-end consumer, it's not. So that's where you're starting to see the weakness. We're more concerned about downside there than we are necessarily about AI stocks and big tech.
In terms of valuations, again, I'll just go back to, I mentioned the one stock. There is this disparity between the loved tech companies that we just discussed and the rest as well, and those consumer discretionary. If you look at the rest, and again, I'm almost just flipping the whole argument on its head here, actually they're not trading at excessive historical valuations. So rather than worry about those companies that are exposed to the consumer, shouldn't we be worried about those companies because they're already marked down with what we're seeing as the economic reality for consumers, that there is a bit of a pinch going on, but most people are keeping their jobs at the moment. Isn't it those AI stocks and those tech stocks that actually they're the ones we should be very, very worried about? Yes, they've got growth, but there isn't a growth phase in history that hasn't been followed by vicious commoditization of product and vicious price wars, and then a markdown, aggressive markdown at some stage in the valuation of those tech companies.
That may very well be the case, but we're probably sort of a few steps ahead of the cycle or the sequence in terms of rolling out AI into software companies and into business more broadly. I think that in order to get a proper drawdown or proper correction right now, you probably do need hawkish monetary policy to play a role. And I think that is, for the moment, much less likely after the data stream of data that we've had and the position the Fed is in. And I actually do think that there is much more scope at this point for the Fed to tilt in a dovish direction, which actually would be market friendly rather than the opposite direction.
Which sounds like you must have one eyebrow raised when it comes to those bearish forecasts on the S&P 500 into year end. But I want to pick up on the banks and just make a bridge from your comments on the discretionary spend. If you're concerned about parts of the US consumer, it's not reflected in the banks, is it? Because the pattern we've seen from Wells Fargo to JP Morgan, very strong behaviour across the board. So there's no credit risk that's starting to flare up through the banking trade at this stage. Would that be the right assessment?
I think it's the right assessment in aggregate. There are definitely pockets. Obviously, commercial real estate has been a big focus. There are parts around sort of subprime autos and the parts that are exposed to the low-end consumer and the more leveraged space in the credit space. That's where you are seeing pockets of weakness as a result of high for longer. It is not big enough so that it results in a material increase of credit costs for the large banks yet, but there may very well be pockets of weakness around the regional banks. That's something that we'll have to see in the upcoming earnings.
Fascinating.
Victor?
Oh, sorry, is it you?
Thank you so much. Victor Herop with us, Global Head of Credit and Equity and Derivatives Strategy, BNP Paribas.
Thank you, sir. Right, coming up on the show, a new poll suggests the far right could fall short of an absolute majority in the second round of France's parliamentary elections on Sunday. Plus, today is the day, certainly in the UK. Polls open in the UK's general election in 44 minutes' time. And don't miss our conversation with the Signum Global Advisors partner, Rob Casey, as confidence falters in Joe Biden's candidacy for president. We'll discuss all of this on Scorebox.
Listen to CNBC's Beyond the Valley, the podcast that explores the biggest tech news from across the globe. Join me, Arjun Karpal.
And me, Tom Chitty, every week as we bring you insights into the top stories, unpack the latest trends, and find out where the industry is headed.
Now available on Spotify, Apple Music, and Google Podcasts.
I do think the France Votes music is certainly funkier than the UK Votes music. Anyway, great choice. Marine Le Pen's national rally is expected to fall short of a majority in Sunday's parliamentary runoff election, according to the latest polls. This after France's centrist and left-winger parties agreed to forge a so-called a Republican front, they call it, with more than 200 candidates withdrawing from the race to avoid splitting the vote. The latest poll suggests the National Rally and its allies will win up to 220 seats. Still in first place, but well short of the 289 needed for an absolute majority. Quick look at various asset classes. The currency is, honestly, you talk about a world, we were talking about the VIX just now and not moving. I mean, that's the intraday on the Eurodollar. The Eurodollar's barely moved for months. 106, 108 would cover it for a long, long time. We can look at the yields. Do I have to do my mental math here? Let's have a look then. So you've got 44 plus 25, 54, 64, 79. So the basis is, it's quite tight still, isn't it? And then that's the Bunds versus the OAT. And we've got what have we got there? The CAC? We've got the banks. Let's have a look at the banks. We're still under a lot of pressure over the last 30 days. Charlotte, what does this mean? I think our viewers are wonderfully bemused by the whole process, even when you beautifully explain it to us. And you talk to one Frenchman or woman, you get three different ideas of what's going on as well. So nobody really knows what happens next.
Uncharted territory through and through. Everybody's just trying to figure out what this election will look like, what is July 8th going to look like, so around the result, what is the government going to look like, what is the rest of President Macron's mandate going to look like. It's all a very new scenario.
Honorary leader of the armed forces. There's so much to debate.
Yeah, but certainly it looks like the scenario that is considered the least bad scenario, as we heard from many guests. The hung parliament seems to be confirmed confirmed after, as you were saying in the introduction there, you had out of those 306, 3 were runoffs. We're down to just 90 after so many candidates stood down, and that has changed the needles in the polls. And you have it on your screen there. The far right, much further away from an absolute majority, that all magic number of 289 seats, their chances of reaching a number has gone down quite dramatically after we have this change of seats. So it'll be very interesting to see. Of course, as we said before, the carryover of votes is not going to be automatic. So the voters will have the final word on Sunday, but certainly looks like things might look more difficult. An element of unknown here, as we've said before, is like looking at the polls when you have a Rassemblement National candidate against a Green, a Socialist, or a member of Macron's party. It looks like the Rassemblement National would lose. The question mark, the big question mark, is when it's an La France Insoumise candidate against the Rassemblement National. There will be a lot of the matches happening on Sunday. There, it looks like a lot of voters are more hesitant in carrying their vote over. So that's one of the unknowns that we have there. So we have to wait and see. But yesterday, Steve, you were saying, is this exercise a bit undemocratic of giving away the choice? In a way, it clarifies things. You have the far right or not the far right.
But and that's that makes not what French people want.
It is, and that's why President Macron called these snap elections. Like, look, it's a moment of clarification. That's what people want, to have the far right in charge. Let's ask them. So in a way, they clarify the choices here.
He's created this as a moment of crisis, of existential crisis for democracy. That's how Mélenchon paints it, that's how the centre paints it. But Madame Le Pen and her party are not saying we are going to overthrow the Fifth Republic, are they? I mean, look, don't get me wrong.
But I do not
espouse right-wing, far-right politics. Quite the opposite. I consider myself a Democrat. But is it democratic to typify the right wing, the extreme right, as a threat to democracy when they are a party that is going to abide by the electoral system in France? They are going to abide by the electoral rules. They are going to abide by the parliamentary rules. They're not looking to overthrow the Fifth Republic. They are looking to exercise power within the Fifth Republic. Is it democratic to typify these people as non-democrats when just because you don't like their politics? That's all I'm saying. And by the way, I want to hasten to add, I despise far right-wing politics.
Well, it's more than that. The question is that there is the clear feeling that there will be a slow undoing of the institutions and not abiding by a lot of rules, whether it's European rules or whether it's the undoing of the president that just has an honorific role when it comes to military affairs. It's a slow undoing of many things. It's not accurate. No, it's not.
Let me just pick up on a post to a Politico.
There's also the promising when they say, we're going to do referendum, and it's a division of society as well. That is just ingrained in a lot of their policies. Some of the citizen new rules around citizenship that they want to introduce are very controversial. They say people that have 2 passports won't be able to have some high civil service position. So you have second-class French citizens then, because they happen to have a second nationality. There are a lot of rules that are just extremely controversial. It can bring in more division to society at a moment when things are so polarized and so tense already.
There is a Russian angle here too, and Politico was writing about this yesterday, saying there was a comment from the Russian ministry's deputy spokesperson and saying, this is the quote, "The people of France are seeking a sovereign foreign policy that serves their national interests and a break from the dictate of Washington and Brussels."
They tweeted that on the official Twitter account of the Foreign Affairs Ministry. I mean, you know who Russia wants to win. They're saying it. They're not even pretending to not try to interfere.
Again, I'm trying to not just make an argument for the sake of it. I believe in Western democracy. I believe in liberal democracy. I believe in France, the Fifth Republic. I believe in the British political system. I do not want to see electoral interference from authoritarian dictatorships, certainly not the likes of Vladimir Putin or whoever it may well be. But if the more French men and women democratically want this party to rule within the rules of the Fifth Republic, who is it for politicians who don't like their politics to conspire to keep them out of power?
They have the choice. There are hundreds of those candidates on the ballot. So now it is for French
hundreds
people
of candidates
to choose.
on the ballots. Now you've got either
hundreds of far-right candidates on most of the runoffs. There is a candidate there. If that's
but
what
you
people
don't get
want,
to choose.
then
You don't get to choose whether you wanted the centrist or the left-wing part or whoever it was. Versus now, you've only got one choice. And so, as a French Democrat, you are being denied choice because your parties have gone together and said, I'm a socialist or I'm a centrist. We're going to ignore that for now because we don't like this other lot.
No, No, I think the fact that these candidates drop out just clarifies the choice. Do you want the far right or not? It just reduces the question to that. It's not, you don't have 3 or 4 candidates, it's down to the far right or another candidate. So it clarifies things, I think.
Charlotte, thank you very much. Speaking of the far right, let's talk about Germany, as the leader of Germany's Christian Democrats has ruled out a potential coalition with the far right ahead of elections next year. Friedrich Merz, whose CDU party is currently leading in the polls, told reporters he would, quote, not move a millimetre on the issue, adding he was surprised that the French Conservative Party, Les Républicains, considered a similar deal in France. Merz also said the French parliamentary elections could complicate cooperation between the two countries. Germany's government has blocked the sale of Volkswagen's gas turbine business, MAN Energy Solutions, to China, citing security concerns. The economy minister said it was important to protect technologies meant for, quote, public order. MAN Energy Solutions said it respected the decision and would wind down new turbine development.
Right, Ericsson warning it will book a $1.1 billion impairment charge in the second quarter, the second write-down on its acquisition of Vonage, amid lower than expected growth at the cloud unit. Last year, the company recorded a $3 billion impairment charge in the third quarter, citing a slowdown in Vonage's core markets. I know we're going to move on, but I'm going to give you a chance just very, very briefly. This is exactly my point about AI. Cloud was the big, massive, wonderful new technology. It is still a massive, wonderful new technology. But funnily enough, these companies are writing down some of the value of the acquisitions because that technology is becoming widespread. There is a diffusion in the availability of that technology. It is becoming commoditized, and ergo, the price is coming down aggressively. It happens in every single technology in history, and it will happen to AI as well.
Well, cloud has been a winner for some companies,
Yes,
but clearly you're saying
absolutely.
not all of them, and it's still providing a lot of revenue for the big players with AI supersizing the
Unarguable,
cycle.
but it has become commoditized.
Execution does matter, and what assets you buy and which market do matter too.
But in any feeding frenzy, in any gold rush, the value of these assets will be pumped up. And then actually when calmer heads prevail, when there is a proliferation of that product throughout various societies, various companies, various states and what have you, then the prices come off. And ergo, these forward multiples, these exponential valuations for AI going forward, they are going to disappear in many cases.
But also
cases.
a problem for companies that are trying to stretch beyond their core business to bolster their revenues in new areas. Yeah. It does show you it's not the easiest pathway. Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.